Welcome to the Swing Trading with Cycles channel. We're going to do our update on natural gas today. It's February 3rd. The market is closed. It's a Friday. This is our weekend update. And my God, the epic downtrend continues. As I posted on Twitter, if you're not following on Twitter, definitely take a look at the pinned comment for a link to Twitter, a link to previous videos, and also other assets reviewed in videos, right? Crypto, broader stock markets, uranium, precious metals. There are other places to make money. Incidentally, the broader market may be moving into a daily cycle low, so a little bit of a complex trading. All that to say, this is not the place to make money, folks. Natural gas is in a downtrend. We have not closed above the 10-day moving average since December 19th. It's been 32 days straight of not being able to close above the 10-day moving average. And as we talked about, there's nothing special about the 10-day moving average. It's just a short-term moving average. And at some point, price, like even in a downtrend, at some point, price is going to close above it. And so we're waiting for that, right? Right now, this thing is at like 2.845, and we're down here at 2.410. So to level set, we made another new low at 2.341. And remember, this is your daily chart. This is day 40 of the daily cycle. So it's really long now. We had a daily cycle that was 37 days. We had one that was 39. This one was 33. This one was 30. So we're, as far as the last like 4 or 5 daily cycles, this is super long, right? And if we talk about, and we're going to look at Boyle, we're going to look at UNG. And I noticed something interesting. UNG is not matching the returns of natural gas. So all the more reason to be careful with this trade, trying to sort of catch the leg up, if you will. But if you look at this monthly chart, my God, again, just as a reminder, I've been doing these natural gas videos on this channel since I want to say early December. I was just fascinated. Oh, wow, natural gas market looks like it's pretty volatile and looks like it's starting a downtrend. So I started the videos around here. I didn't know that we were going to get down here. There's no way I could know that. But I knew we were in a downtrend. How did I know that? Well, because of this swing high here, right? This is August, right? This month made a high, and then the next month, September, made a lower low below that low of that month that made the high. That's how a downtrend begins, my friends. Again, take a look at the pinned comment. There's so much content in there. Pace yourself, though, for sure. But an entire video about what a swing high is, how to identify it, how to play it, an entire video about swing lows. A swing low is how an uptrend begins. That's what we're waiting for here, folks. At some point, we're going to get a monthly swing low, something like that. Like imagine the March candle looked like that, right? Like that's your sign that, oh, okay, we're going to start a little rally here. Why? Well, because we would make a new high above this month's high, right? And so just to be clear, the high for this month is 2.780. And so we would want to see a high above that level in March to tell us that we may be starting an uptrend on the monthly chart. And this is month 32. Is that right? 27, 28, 29, 30, 31. Yeah, so this is month 32 of this longer term cycle. And again, as I talked about, I started these videos around here where we were clearly in a downtrend. And I talked about how this level was a magnet, right? And it's so clear because we had this massive rally and then a pretty protracted decline. I mean, this is pretty orderly. I mean, look at this decline in 3 months versus this decline in 3 months, right? Like, my God, the difference. Like, what is this percentage decline? So that was a 46% decline. And this is, oh my God, a 67% decline. Yikes. So point there is that price was able to, basically, this is where price found buyers around the 360 area. And so that's why in early December, I talked about 360 looks like where we're headed. That's when we were above $6. Below that, you have this 240 area. And we're obviously there now, right? So what the hell is below that? Well, the most obvious level is the sort of 2.236, which is this little pivot here. And again, I talked about this. Look at that pinned comment, my friends. So for the previous videos, we've been talking about this for the last few months, really. This cluster of price action makes sense that price is going to come back down here to revisit this because that's where price aggregated before. And so wouldn't be surprised to see it tag the bottom end of this range. I mean, at this point, it looks highly unlikely that it won't get down there. It's really going to be a question of, is that going to be our bottom, right? Like, is that where price can finally sort of bounce from, right? Like something like, made this huge move down and then do something like this, but it might do something like that, and then something like that, and then something like that, right? That's why you want to understand how the price action works. You want to make sure you're looking at the right things. That's your monthly chart. We'll just double back on the weekly. So you could look at this a few different ways. You could say this is actually week 30. So this has been 14 weeks and this was 16 weeks. So if this is a whole cycle here, it's been 30 weeks. Either way, it's incredibly left translated, crazy downtrend. I mean, look at this pivot. This pivot breaks down below this pivot. We get a little bounce, and so that's important to understand, right? It's like we got to right below this pivot here, right? So this is a false breakdown, folks. We broke down below this level here, right? So we broke down below it here this week, and then the following week we rebounded. This week becomes a weekly swing low, and then we start a rally. But look what happens. The rally peters out after 4 days. That's what this 4 means. Again, pin comment. There's a video about cycles analysis. That's how you think about this. How long does a rally last? How long does a decline last? That's all a cycle really is. And so it's possible that when we get this weekly low, we're going to get a short rally like that again, right? 4 weeks, maybe 5 weeks, and then we roll over again. We can't know until we get it. Predicting is like gambling. You don't have to gamble. Follow the price action and react after. And so we also talked about the fact that these 3 weeks in a row, we had this pattern of we open as an inside week, then we make a lower low. Open as an inside week, make a lower low. Open as an inside week, make a lower low. This week broke that pattern in a bearish way, by the way. We didn't even open inside. We had a gap down opening. So the opening was below the low of the previous week. Now, do we see that again next week? No way to tell. Again, we can't predict future price action, but that just tells you, like, once that happened, right? And I'm not going to be able to do a video every day. Just too busy now. But that's why I'm explaining this to you guys, folks, right? Once you see something has a gap down opening below the low of the previous week, and it's not reversing to go green to try to form some kind of bearish outside candle, that's bad news bears, right? This thing opened this week at 2.72, and we're closing it at 2.410. That's all you needed to know was that open. Again, it's always possible that an open below the low is actually going to become a false breakdown. But we had absolutely no evidence of that. I mean, look at this tiny little upper wick. So we had this little feeble rally that kind of, let's just zoom in here, right? So like we had this feeble rally that did break above the low and then just kind of failed. Oh man, bad news bears. So we're also going to look at, again, as I said, we're going to look at Boyle and we're going to look at UNG. Let's just look at UNG let's look at Boyle and natural gas kind of side by side first. So this is your annual chart, right? So each candle is an entire year of price action, right? Entire year of price action. And so what do you notice, right? Boyle is making all-time lows. I mean, my God, I hope you've seen it. And if you're new to this channel, welcome. But like the power of this channel is actually not even about making money as much as it's about avoiding huge losses, right? What you'll find is that if you can avoid huge losses, making money should come relatively easily. This is such an incredibly bearish chart. I mean, my God, it's making lower lows year after year. And so if you're going to be in this thing, you better make sure you know what you're doing in terms of your your entry and exit strategy. And so, and we're going to zoom into lower time frames because I want to just really kind of zoom in on something here. But I mean, look at the yearly chart for natural gas, folks. Look at this thing. We are so far below last year's low. And I mentioned this in the previous video. We talked about this. It's important to understand these bigger patterns, right? Like what this is telling you is that this is essentially, let's just draw this out, right? So like this is a high and now we're like, are we going to make a new all-time low below here? It's too early to tell. At the moment, that is the trajectory of price, right? There's nothing stopping price right now from dropping down below this low. I mean, I hope you can see that. I mean, look at this. It's in free fall, right? The only thing is that we know we're so deep in the weekly and daily cycle that a bounce is probably going to happen soon, right? So that may be your saving grace before you get down to that all-time low. Now, if you look at the monthly chart, I want to call out the actual rally situation. Like, has Boyle matched natural gas in terms of the rallies? Let's see. Okay, so let's look at this big rally for natural gas. I mean, we talk about how this is week 30. This is month 32, excuse me. So these are monthly charts. So left-hand side, natural gas, right-hand side, Boyle, and we'll look at UNG as well. We'll look at them side by side. So we talked about how this was month 26 and this is month 32. So this is a long-term cycle advance, right? What percentage increase has that been? Let's see. From the Pico bottom, which was the all-time low, that was June 2020. So it's right around when crude oil had its crazy negative move. We made an all-time low at $1, basically. Oh, actually, no, that's not right. It wasn't an all-time low, not an all-time low, but certainly your recent low. Off of that low, it's been able to rally 596%. So to be clear, that's a rally from June 2020 to August 2022. We're talking about a long rally, folks. That's over 2 years. And that's what this channel is about here, right? Let's catch the trending moves that are going to last for many months. Well, now let's look at what Boyle did over that same period of time. So again, that low is in June 2020. Let's find June 2020. Where's June 2020? Oh, and let's zoom in just to make sure that we're all able to see it. I'll just get rid of that line here for 1 second. So this is June 2020, right? This candle here. What do you notice as your first, what's the first big thing that you notice? Oh, right. We actually made a lower low below that June 2020 low in December 2020. But natural gas did not. That's super important to understand. Boyle collapsed below the low that was formed in June 2020. Boyle did, but natural gas did not. Let's look at the natural gas chart. What happened in December 2020? That's December 2020, right? Let's zoom in. Let's make sure we can all see it. So the low here for June 2020 is 1.444. 1.44. The low for December was 2.238. That's a huge difference, right? Let's just quantify that. Let's just make sure that we are all on the same page, folks. What's the percentage difference from that to that, right? Right? So that's a 54% difference. So that's important to understand. So Boyle made a lower low, whereas natural gas made a higher low. That tells you that just illustrates how Boyle is not going to necessarily sort of follow or keep pace with the moves of natural gas. It's going to be more bearish. That's just by its nature. So to make it fair, let's just look at what the rally has been since December of 2020, since we know Boyle made a new low that month. Again, natural gas did not. That's important to understand. But if we just isolate this rally and say that it started in December 2020, when we know it didn't, it started in January. But since Boyle made that lower low that month, we'll look at it from there. That is a 356% rally. So because of its leverage nature, and I know at one point Boyle was leveraged 3x, and now it's closer. I think now it's 2. If we made let's just use the 2x version, you would think that we get a 700% move on Boyle, right? From December 2020 to August 2022. Well, what is the move for Boyle for that time period? Well, let's look. The data is all here, so let's just look at the data. So where's December 2020? Right, it's this candle here, and that's your August. Oh, wow. Well, that's also interesting. Notice Boyle made a high in June, whereas natural gas made its high in August. So, oh man, this just gets worse and worse. So now we're actually looking at the rally from December 2020 to June 2022. And that's because Boyle topped out early. It topped out before natural gas did. So what is that move? Oh, well, what do you know? it actually does get you to that 700%. So just about double what you saw from natural gas. Now that's assuming you can survive this like gut-wrenching rally, or excuse me, decline for 3 months. I mean, what was that percentage decline from this top to here? Oof, 75%. So just to be clear, to be able to stay long this whole 700+% move, you'd have to endure a 75% drawdown in the middle of it. And which is, I mean, you know, some people could sit through that. Don't get me wrong, but that's important to know about. That like that was part of the cost of admission, if you will, right? And so let's look at UNG. Let's kind of look at a similar analysis for UNG again, looking at them side by side, kind of understanding how are they tracking natural gas itself. So the first thing that you'll notice for UNG is that it did not make a lower low in December. So that's good. It didn't make a lower low in December the way oil did. It's a higher low just like natural gas. So the low was 1169, and that June, oh, actually, no, that's not right at all. I'm sorry. I'm looking at the wrong pivot, my friends. UNG did make a lower low in December. So all that to say, the products that retail uses to access natural gas generally aren't super great at tracking natural gas. Because again, this thing, UNG also made a lower low in December 2020, below the June 2020 low, even though natural gas was able to stay above that. And let's see, what was the rally from that December low to... Okay, so very close to natural gas, 300%. And again, what kind of drawdown did we have to endure here? So that was a 46% decline. Let's see, what was the actual drawdown for natural gas during that time period? Was it similar? A little bit? Oh, so it was actually pretty spot on. So this goes to show you, UNG actually doesn't do a terrible job of tracking natural gas in the, like, overall. Though, again, the idea that it makes a lower low when natural gas is making a higher low, that's pretty, that's definitely pretty concerning. And what I would want to point out is they mentioned this on Boyle's page itself. And again, so now we're talking about Boyle, not UNG. But this leveraged, you can see this leveraged ETF seeks to return 2x for a single day. Notice that they highlighted that and made it larger text, larger font. So they're trying to tell you, and it actually says very specifically, due to the compounding of daily returns, holding periods greater than 1 day can result in returns that are significantly different than the target return. And ProShares returns over periods other than 1 day will likely differ in amount and possibly direction from the target return for the same period. They're telling you it's not going to do a great job at tracking the thing that it's trying to track. These effects may be more pronounced in funds with larger or inverse multiples and in funds with volatile benchmarks. Is this an inverse fund? Yes. So you check that box. Would you say the underlying benchmark is volatile? Yes, very. All that to say, when you buy Boyle, you have to understand the risk that you're taking into your own hands. So, and UNG is no picnic either. And we talked about this in previous videos. We'll just let's go to UNG now. We're making new all-time lows for UNG. Now it's bounced a little bit, to be fair, but we just made a new all-time low. We'll throw that up on here on this chart. We talked about how that 822 level. So yeah, so we closed at $8.19, new all-time low. I'll just say, if you're going to be in this, you have to understand what the signals are that suggest that we may have a bottom. I hear people talking about averaging down. I'll just say that's incredibly dangerous. Averaging down is incredibly dangerous. And it's a potential way to lose a lot of money, especially on something volatile like this. We know what we're looking for. For UNG now, we made that new lower low today. So now we need to cross above the low of today, the high of today, which was $8.34. So above $8.34, we have a swing low. Also remember that we're still below the 10-day moving average. So it's the same pattern. Since December 19th, has not been able to close above the 10-day moving average. At some point it will. Right now, the 10-day moving average is like, where is that? It's like, oh, wow. The 10-day moving average is like around $9.50. So way up there. And again, at some point, it's going to close above there. I would not be buying it in anticipation of that, though, right? Like, Buy when the uptrend has started, not as the downtrend continues, trying to anticipate the start of the uptrend. That's what I would. That's it. I'll say that's my approach. I learned. I had to learn that the hard way. I didn't have the benefit of a channel like this to teach me this stuff. I paid a lot of tuition to the market to learn this, and so take it from me. That's very dangerous if you're talking about averaging down. And so we have to just be patient here, see what develops next week. It is also important to note, I'll just switch over to the SPX really quickly. We probably made a daily cycle high here on day 27, but we talked about this, that this is where the move was. And in previous videos, like if you want to make money, get into the uptrend. That's a higher low. That's a higher low. This needs to hold a higher low. So guess what? We've got to stay above, call it 4,000 round number, which makes sense also. It's like a psychological level. This is your 10-period moving average, your 10-day moving average. So you expect price is going to cross below that. So all of that to say, the broader market is in an uptrend on the higher time frames, but it's probably going to have a pullback on the daily time frame, which will only put more pressure on natural gas, right? It's not like natural gas is going to rally while risk assets are declining, right? It's probably also going to get pulled down as well. So just be careful here, folks. Be really careful. And again, there's so many other things to trade. Take a look at that pinned comment. So many things to choose from. Uranium, precious metals. Well, precious metals are also in a weekly cycle decline. Like they're in weekly cycle decline, not just daily cycle decline. So important to note that. But there are a lot of options here. You don't have to be stuck to this trade, which is a losing trade right now. It won't be forever, but right now it is. So we'll leave it at that. Thank you for watching this update. And again, follow on Twitter. I'm not going to be able to post a video every day, but I am also teaching a person how to fish as opposed to just like you. Hopefully you're learning stuff from here and you can look at a price chart and kind of discern some of this stuff yourself. That's the whole point here. So thanks for watching again. We'll leave it at that.